56-year lows. Okay. But the unadjusted data increased and seasonal patterns continue. Okay. Weekly changes in jobless claims, big moves in Texas, California, and Michigan. Don't know what to tell you there. All right. Anyway, key thing today, key thing that we're watching, just what these guys are saying. Look for a little intraday vol between 9:30 and noon. Rate expectations are the only macro variable that actually matter this month on the Fed. And we're still in this soft landing thing that we've been doing for, 4 years? We're still talking about soft landings. They're printing money, and that's why the GDP is as high as it is. They keep printing money. If they stop printing money, we will show you what a hard landing looks like. Two more things before we jump into the runner. Crude and gold losing their risk premium this morning. The Iranian tensions have cooled off a little bit, I guess. Trump saying that there's no plan on executions, explosions in Tehran. Again, I haven't really been digging into this too deeply, but markets hate misdirection, and they're pricing out the panic. So crude's back, moving lower. Gold is off that lower edge of the range. Copper's down because China's equity market still can't really get out of bed. And as I'm going to mention in a minute, the stimulus in China has not really shown up yet. China's easing, but the markets really don't seem to care right now. The PBOC cut relending rates. They boosted innovation quotas. They loosened their mortgages down payment rules, and they expanded their liquidity tools. The M2, the new loans, the total social financing all beat expectations. That's real domestic stimulus. Yet the equities aren't doing much. So copper's flat and moving lower despite the fact that credit has been expanding, and it tells you that sentiment is the problem, not liquidity. So this matters because sentiment will eventually turn, and commodities will reprice relatively quickly. Right now, there's a disconnect between the fundamentals, and Blake came in yesterday and was talking about copper. He kind of saw that being a top. Entirely possible that the sentiment with China continues to erode, which would pull copper back. But the way that I'm looking at copper is if we do see selling and we start to see it aggressively, I'm looking for, on the hourly, I'm looking for oversold. We haven't been down to oversold in a while, but I just keep arguing. If they're going to keep printing money and they keep focusing on their domestic production, I can see copper pushing into that $657 level, but looking for a little bit of a pullback first. Hey, we did all the stories on time. We got it done by 9 o'clock. Look at us. Ha! Here we go. We're looking technically at stocks that are breaking out, stocks that are potential shorts for today, and our core watch list. I'm going to start with Macy's on the watch list. Just because, yeesh. I talked about this stock before, and I've showcased that when it wakes up, it wakes up. And when it breaks down, holy cow. And we had a nice move recently, but the EMA continued to break down, and we rolled right back over. This is a real estate company at the end of the day, trading at outrageously low metrics. But we are pushing to oversold. And when we push to oversold, we look for a bid. RSI right here. Now, the problem and the challenge is, I don't want to own Macy's. I really don't have a fighting desire to own a company selling paper clothing. I don't think I own anything from. I think this is where I went to buy school clothes when I was 7. Not by myself. That would be that'd be incredible. So what do we do here? Well, 1980, see if we get a bounce off this 100-day EMA. But again, I'm looking for reversals on this 8-hour, 20-hour, if we can get it. And then I'm just buying in the money. NVIDIA's on the list because NVIDIA is NVIDIA, and it's trying to wake up, but we're holding right at these key moving averages. My expectation is if the rest of the semiconductor space continues to get a bid and we start to see strong flows back in here, I can see NVIDIA back 192, 193. Clean way to trade it. Again, you buy at the money near a key moving average. 182.80 is currently the 20-day. The 50-day is 180, so that puts you at 185. Of buying a 185 and selling either the 187.50 or the 190 out into February. And you keep a tight stop, and if it falls back to like 180.20, 185.20, then you just take the cut. You just 5-10% loss. You're looking for a continuation. You're looking for a resurgence of momentum from the semiconductor names. PLAB, I have not seen this name in a while, but Phototronics trying to wake up. This was on our hourly. You need to see a break above 33.28, and that is just buying the stock and keeping a tight stop. On the weak side, Workday, not good. Oh, Workday. Look at this thing. I can't really do much with this, unfortunately. It's just, lower lows, but we're moving to oversold, and that's typically where we see some short covering. This has about a 4% short float. And I know that Brandon's going to be talking about short squeezes again soon. So pay very close attention to that. We'll talk about the key between 4% short float and 30% short float. Pretty significant, but we're coming down to oversold, and I can't really do much with it. I have no desire to own Workday. I really don't. So what's the point? Looking for momentum to return at that point, but I'm not selling any spreads on a name like this, just showcasing weakness in this name. DAL and Jets, the near and dear to my heart, Delta Airlines. What's happening, fellas? That's a shame. Delta, break it down a little bit. If we tap off this key moving average, you're noticing that the 8 is catching up with the 20. That can take us down to 67 or 63.27 pretty quickly. So this is where, and I reluctantly do it, buy the $69 or $70 put and sell down here around the 67. And all you're looking for is a relatively conservative put spread on that name. So what does that look like? Just a quick reminder. When you're doing a put spread, there's two different ways that we talk about put spreads quite often. The first is if you were selling a spread. If you are selling a spread, you are bullish on that equity. By selling a spread, you are trying to generate capital on the hope that the stock either goes up or trades sideways, but does not hit the strike price. With this, you want the stock to go down when buying a put spread. So DAL, Delta Airlines, I was a platinum member up until 15 days ago. Spent all that time and all that energy building up that rapport, and then I never did anything with it. The February 20th $70 put is $378. The 67.50 is $250. So that puts you at a break even of 68.75. Probability of profit of 49%, 125 to make 125. Now if the stock goes back up and breaks above that key moving average, both of them, then you're looking at about a 15% loss, which is conservative. Looking for continued weakness in these names. Optimal place would have been back here when the MACD crossed over. Can't win them all. Or just overbought, completely overbought, and then has since broken down. But by selling by buying the spread, you provide yourself a little bit of protection. And if it goes the wrong way, this doesn't turn into a 25, 30, 40% loss within 10 minutes. Instead, this is aiming to manage a trade where you're kind of in this no man's land spot, but we're looking for the continuation to the downside. And then what you're looking for is, let's say you hit, what is that level? 67. Hit 67. Next couple of days, that's about a 20% gain. And if it continues just to hover in this range, the opportunity here is upwards of the 40% heading into the final week. So Delta is on the list. Jets is on the list. Seems like the airlines are showing weakness again. Same type of trade. Buy the 30, sell the 27.50. Buy the 29, sell the 26. Same type of thing. PHM is on the list as well. Pulte Group. Had a nice pop, move to overbought, and now let's see if we sell back off. Pulte Group shares fall as Trump administration housing czar, criticizes home builders' aggressive stock buybacks and calls for a different business model. Now do airlines. Yeah. All right. Good stuff. CLSK. Pure momentum stock. Clean spark. Not for me, but breaking above these moving averages. We've had a huge series of runs on this stock in recent months. Goes $4, $5, $6 moves. So there's your crossover, 820, breaking through. You just buy the stock and you set a stop back at 13, 2%. And I'm going to repeat this. Somebody reached out and said, you were bullish about something recently, and I bought it. And now it's down 20-some percent. And I said, yeah, but where is it against its 20-day moving average? 15% below it? That's your stop. That's your stop. So learn the rules. Again, in momentum, some of the best momentum strategies have 2% to 3% stops. I know you're going to have a lot of losers, but it's the one that runs that makes your year. Discipline, 2% stop on CleanSpark, TMC and EOG. Okay. The Metals Company. Don't they like mine for things in the water? I don't know, man. I can't get behind this one right now. Watch it go to 11 now that I said that. I'd be a little cautious with this given the fact that other metals prices are pulling back today. And yeah, we're already selling to start the day. Looks like we're moving oversold. This would make for a good zero-date stock for tomorrow. Speaking of which, Don will be here in 10 minutes to talk about zero-date. So that's just perfect timing. EOG, energy's moving up today, and EOG is trying to hold that 100-day EMA. If it cannot hold and it breaks lower, a re-entry at around 107.21 would make sense. All right, we got 9 minutes. Macy's is the poor person. Okay. You guys are really getting into it, Secret Agent Charlie. BTBT. Well, we're waking up a little bit. That's good. That should expire tomorrow. So we got to sell another call on that for everybody who was in NVIDIA with me. We have to manage that position out. RXRX is always in play. Not doing well now. Looking for a move back above that 483 level before playing in that sandbox again. What questions does everybody have? What about PIC? Well, that's a nice looking chart. Well, we're overbought, and that's very clear. And as you've seen, when we get too overbought, we do see periods of profit taking. So the next retest will be likely the 8-day EMA or 53.47. And then you're looking for a continuation of trend higher. I don't see how in this environment where speculation is rampant in metals, and this will come to an end at some point, no doubt about it. You have shortages, structural shortages in copper and in silver. You have palladium that continues to just melt higher. You have gold that is doing very well because of debasement and central banking demand. I still think this can go on a lot longer than people believe. So, I've seen some people making very aggressive silver calls, particularly when it comes to people who are very knowledgeable of the space. Eric Sprott suggesting that gold and silver will move to 8-to-1 ratio. Some professional traders suggesting 34, which would be the 2011 low. I think just based on the fact that we have a paper market that is under a lot of stress, it's problematic. But the question is, where is the benefit going to really come from? Is it going to come from the spot market, or is it going to come from these companies that are going to be pulling everything out of the ground, just simply stating, we're not going to be taking this stuff to CME. We want direct purchases. There could be a pretty significant shakeup. Is it going to rain tomorrow? 20-to-1. Okay, that's fair. Intel has been going up, up, up. And I have said I like selling spreads when the opportunities emerge down around the 37, 35 level. We were very long Intel at 16. And it has delivered. We were back here. The first conversation. Where was it? It wasn't 16. Where was it? It must have been 18 then. It was where, yeah. So it was back where the CEOs and the executives were buying the stock. Significant moves. 19. So again, if you're trying to chase it, don't try to chase it. Try to buy it for cheaper. Put spreads, $40 level, no problem. Clean. FNGD, you guys are going to make me look at this chart every day, aren't you? Every day. Yeah, I just want to remind you when it comes to this, it was a casual observation and an alignment of momentum and the correlation between the breakdowns in momentum and this specific ETN. What this is suggesting is that the bulk of the vol is, or the bulk of the selling that is fueling the upbid in FNGD is likely tied to NVIDIA, Netflix, but it is showcasing stress. And it's telling me once again that there still remains adequate problems and challenges in the repo market, and that the Mag 7 has not been the beneficiary of new capital flows to start the year. We still have a green signal. We still have a positive signal. Now, the tech sector is under pressure and the XLF is under pressure, and that is a little concerning because it's not just the FNG got to watch, it's the FAZ. The FAZ is waking up now, right? So, this is just, I have to go back and look at 2023 and see how the market behaved at that point. And I have to go back and look at early 2022. I don't think the FNGD goes back that far. I think it was replaced a couple of times. Let's see, 2023, start of the year. It did not show vol. Did hear that Silicon Valley banking crisis. That's the bottom of the liquidity low. So, again, I got to get in contact with microsectors and have a conversation with them. But it is just a reminder. We've just showcased a lot of stress within the broader tech world, within the financials, and we're seeing rotation more into quality and value at the minute. And we are coming off of, a pretty significant spike in momentum. And now we're seeing profit taking, and that's seems to be manifesting across the FNGD for now. So it is confounding and it is concerning, but for right now, equity flows look pretty strong, especially in the Russell. And we just have to continue to monitor the situation, because there's nothing in the data set yet that suggests a breakdown is imminent. And it's also interesting that vol is at 16 while the FNGD is breaking out. And it's entirely plausible. Like I was like the only person talking about this thing, and now people are talking about it. Like a lot of people are talking about it. And I'm curious if there's some games being played. I don't know. Like no one talked about the FNGD and momentum until we started doing it in like 2024. I don't know. We'll figure it out. GRHOF. Well, again, graphite, all those metals, it's going to follow, man. It's going to follow. All right, keep it dry power until the SCOTUS. Okay. Now, the FNGD is FANG stocks. It's a reflection of FANG stocks. So the S&P 500 can go up while FANG stocks drop. And there's a reason for that, because there's 493 other equities in the market. Just keep that in mind. Don will be trading at 9:30. Am I going until 9:30? I don't know. All right. 1 second, everybody. Check this chat real quick. All right, now we're good. All right. I could play Van Halen, but I'm not going to. Man. Anything on AIG, again, it's the same thing that I've said. It's a issue with the new CEO and ongoing softness in the insurance business. For right now, we will look and see what other stress is out there as it comes. That's all we can do. All right, 9:20, everybody. Don's coming up for Zero Date right here. 10 minutes. So stick around. Doing it live, doing it in the show. Very important that you understand how this market operates and how more money is flowing into Zero Date and the opportunities that exist for people who are prepared and people who are educated on how to trade Zero Date. I hope everybody has a great trading day. Don's going to throw in some music, and then boom, Zero Date Don. Have a good day, everybody.